begin. From a telly-boo, we have the nice pleasant music. We'll turn that music off. As nice it is. There we go. Good morning. Let me do one thing. Don't freak out. Hang in there, kid. Talk to me, goose. All right. Oh, there. We should be done. All right, good. So it's a Friday. Happy Friday. Made it through another week. It is Friday, April 27th, 2018. This is your daily Forex trading strategies session, hosted by Forex.Today on their wonderful YouTube channel. And my name is Wayne McDonald. I am the Chief FX Market Strategist for Tradersway.com. We are a boutique trading firm, and we're unique because we love you. We care about you. In fact, you're my sweet baby. Now, why would we want to do that? What kind of business model? What kind of broker loves their clients? Well, the kind that sees their relationship as symbiotic. See, if you can find some success and first of all stay alive as a currency trader and then thrive as a currency trader, and you're trading constantly, day after day, week after week, year after year, well, then that means we're providing an excellent service to you, and we charge the normal competitive fees that any broker would, and you're happy. We're providing you customer service that is world class. We're providing you execution speed that is very, very, very fast. Fees are very, very competitive. So you're super happy because you press a button and your trade is executed into the interbanking system as it's supposed to be. You'd think that would be unique, but it's not. But the thing is, we want you to thrive. We want you to not just survive, but thrive. And that's why I'm here every single day. So as an organization, we see that we're investing into your success up front first by me providing these educational webinars where I teach you technical and fundamental analysis. We cover trader psychology and all that. So this investment is being made for you now. You're probably still trading a demo account. You might even have a live account at some other brokerage firm. So we're making these investments into you by providing these webinars day after day after day after day after day. I mean, I've been doing this for 15 years. So the goal here is that not only can we bring you the skills, teach you the skills that you need to survive and then thrive, and allow you to build your confidence in these skills so that you launch your successful Forex trading business, that out of all of that, the competitive rates, the fast execution speed, the world-class customer service, maybe, just maybe, besides all of that, just out of pure loyalty and respect for our investment up front into your success, you choose Traders Way as your prime brokerage for your successful Forex trading business. So there's the grand scheme. We want you to succeed, so I'm here to help. So if you like this webinar and you're watching it live on YouTube, would you give the little thumbs up thing? It gives me some feedback that we're hitting the right topics. And please, please, please feel free to ask questions. There are people that have been in my webinars for many, many years, and some are brand new. Get involved. All right, all you new guys, get involved. Ask questions. Let's roll up our sleeves and get to work. So today we'll cover the yen pairs. We'll cover the dollar pairs. The big news of the day is not peace in the Middle East, but peace in Korea. Very, very interesting. Very, very, very interesting. So we'll have to look at for sure the Asian pairs for that. I might have to wear my glasses if you don't mind. These are not the right glasses. So that's quite a bit. Oh, and if you subscribe on YouTube and you click the little, what is it, a little bell shape, then when I do live events like this, you get a notification. It says bing. So maybe subscribe as well. So great. Thank you, Adam. Thank you for the like, guys. Appreciate that. Okay, cool. So, like I said, you're the boss. I am simply a humble currency trader that happens to have done this for a very long time. So, you're the boss, okay? Ask questions, get involved. I like to call it participation. You get it? Yeah. All right, cool. Oh, yeah, we have a request for oil. I'm happy to do that. We can cover gold as well. And any other random thing. We can cover the peso trade. We could cover high yield trades if you want. But whatever you want, okay? Coolio. So again, thank you for the whatever that is. So these are the yen pairs, but let's not start with the yen pairs. We'll leave those. Okay. And McAfee says we're okay. Great. Thank you, McAfee. So why not just start to the top left? This is Aussie dollar. And how is Aussie dollar doing? Well, going back originally, my trade plans, and by originally I mean the beginning of the month. On April 1st, I know it's April 27th, but just to get you get your mindset, on the first 27 days ago, my plan based on positive macroeconomic outlook, okay, fundamentally driven strategy, I felt that there was decent hope for the Aussie versus US dollar to go up, and that this was my exact buying price right in here, which we took. It went up 100 or 150 pips, and the goal was supposed to be up in here. And then we had several central banks talk their currency down. 10-year T-note approaching 3.0 on for the U.S. and a very, very quick collapse. But this is really centered around the Bank of England, the European Central Bank, even the Bank of Canada talking down their currency. There might even been an RBA thing just so long ago it's hard to remember. But notice how quickly it collapsed. That's one thing. Second thing is, even though I'm wrong, if you look at this, even though I'm wrong, by the end of the month we're not higher, we're lower, I still had an opportunity to make money because my entry was proper based on swing trading. Okay? And then third, look where the short actually happened, right? That's straight out of a typical swing trading course would have you sell at that exact price. So this is 78, right? 78, and it double topped and then dropped. So if you happen to be a bear and you happen to set up your swing trade properly, that was a pretty easy trade for you. If you're a bull and you set up your swing trade properly, that was a pretty easy trade for you. And even though you're wrong, you probably still made money. I think I broke even on this one because it's just an example type trade. And then lastly, as far as this week, because this actually started last week, this week it was kind of hard to catch. These are monthly pivots. I think you had one little shot here into, I think, a weekly pivot or something. But there wasn't very many good entries. There were a few short-term, scalp type entries and stuff. But on this time frame, they're not that great. Like, I've seen better. Let's just put it that way. And there's so few pips left after this dramatic move. But the target is right here on this orange line that we've drawn a few days ago. And we pretty much have hit it, right? On the last day, it's not technically the last day of the month, but it's the last day of this week, almost the last day of the month. Right? Let me just double check the last day. Yeah, last day is Monday. So, it's pretty gosh darn close to the end of the month. But that is the bearish target. So all of this said, beautiful trading for bulls. And then beautiful trading for bears. And if the market just happened to agree with your particular strategy, you should have gotten paid. It was pretty good. Either way, right? So one of the things we'll start covering next week is setting up next month's trade. It may not be easy because these are pretty dramatic moves. How about the news outcome for advanced GDP? Well, first of all, it's advanced, Harley. So what does that mean? Massive revisions. Second of all, GDP is like months ago, right? It's already pretty old news, Harley. So I think anyone that's a professional, like let's say that has an analyst staff and stuff, they can go and build their own GDP model, right? Because you could look at, consumption data. What would you use for that? Like retail sales, for example. What's the trend in retail sales? Is it improving or not? Right. You could also get some income data and try to create like disposable income type data. And the marginal propensity to consume in the United States is actually quite high. It's like 80% or maybe even higher, 90%. So you can get some income data, use a marginal propensity to consume formula, and bust out some sort of best guess for consumption, right? Government spending, we already know, right? Business investment, you can get that kind of data. So what I'm saying is you can pretty much build your GDP, right? So I don't think it's going to matter that much. Yeah, right. So Harley, well, I have to explain why I have the opinion, Harley, right? Harley's like, well, I guess it doesn't matter then, right? Well, that's what I'm trying to say. Like, GDP is important. Final GDP, I think, is more important than advanced GDP. But at the end of the day, it shouldn't be that big of a surprise because it is so lagging and everybody has the data, right? Everyone has the data, or at least approximate some a simile thereof or whatever, right? So we'll trade it, but it shouldn't be the end of the world kind of thing. It shouldn't make or break anything. Yeah, it matters if it's missed or surprising, though. But what I'm saying, though, is let's say, Shaw, it does miss or is surprising in some way. That's expected in advance because they've thrown the numbers together really quickly. And the probability of being off is high. So it's just going to be revised. You see what I mean? So it's just, yeah. So, yeah. I'm kind of setting up next month already, right? So today's advanced GDP, all right, good, it'll be interesting. But I'm kind of setting up next month's trades and looking at past data from 2, 3, 4 months ago. It shouldn't be a market mover, compared to other things, right? So it's important, but not that important. Okay. So anyways, the bears are almost hit their target, which means maybe you want to start buying this if you're a bull. Now that is quite a dip, but you do have permission. Okay. You do have permission to start thinking about going the other way, but don't do it simply because there's a pivot there. Do it because you happen to be a bull anyways, and that is like one chance, one opportunity for you. Okay. Now this USD CAD, this goes back to our conversation in yesterday's webinar where I said we're kind of in the upper echelon, the upper zone here, to consider if you happen to be a bear anyways, which means you want oil prices to go up, you want good macroeconomic data, you want Canadian dollar strength, you want US dollar weakness. If all of that is the case, we're in the zone where you start thinking about selling. Okay, and I have a Pegler pitchfork here, and you could say, well, why don't we base it off this week's R2? And you'd be looking at it this way. I just have it up here. It's a little higher. There's a shoulder. There's the monthly central, although this month is pretty much dead. Okay, so if I was looking to sell this, and I said this yesterday, it might be yesterday, it might be today, it might be next week. I don't know when, but I know my price. And we're definitely in that zone. This 129 area is very, very interesting for a sell. I don't know if I'm going to get it. The market has to agree with my hypotheses. Okay? So I don't know if the market will agree with my hypotheses. But if it does, if I see it roll over here, I'm trying to move my chair. If it does, then I got to trade. Oh, well, that's not what I wanted, but okay. So what I'm thinking is maybe this rolls over. Okay. So imagine it this way, if you have to have the pretty lines. Imagine it like this. Okay? Yeah, I'm going to do it here. Okay? That's what I'm thinking right now. Do I have any sign that that's going to happen? No, but that's called a trade plan. Yeah, where do I look for the rollover? Well, first of all, you have to have your price. So you zoom in and you're like, what if I saw it drop off the R2? Or even near the R2? Okay? So I'd get off the 4 hour and I'd look at a 15. And I could start trading it here. Okay? So it may have already started. 618 predicts 1382. 1382 is right here. So basically, right, lower high off of a double top. Okay? It's not the world's greatest entry. It's not the world's greatest setup. But if I was a bear, I could start chipping away at the iceberg, right? Well, Brooke, that would be very interesting for euro dollar. We'll cover that later. But you see what I mean, guys? Like, you don't know if you're right, but that's my strategy. The strategy on the long run, let's say, again, the 4 hours, maybe this heads down for fundamental reasons. Then on this time frame, I say, well, the red zone is where I believe the bulls are going to get out of their bullish moves, which may create some bearishness. So then I drop into a 15-minute chart and I say, well, why don't I treat this as a double top in my red zone at the high end of my pitchfork? All of that put together, just below a psychological level, I trade this as 100% fib retracement. Because remember, let's do it this way. If I was a bull, gee whiz, okay? If I was a bull, I would have marked it up this way, right? Well, 786 doesn't predict a higher high, right? So you could say, well, that is the dead giveaway. If this was so bullish, it should have kicked off this 382 right here, right? Roll reversal, roll reversal, roll reversal, right? It should have stayed above this gray line, and it didn't. Instead, it made a 786 almost 100%, which then indicates you need to turn your fibs upside down and expect a lower high, and that's game on for bears. Okay? That's how you do it. Are you right? We don't know if you're right, but that's why they invented stop losses. Okay. And again, this whole red area is where bulls are supposed to get out. Does that mean bears are going to sell? No, but these guys are supposed to be taking profit, which means when they say get out, their broker enters a short position to offset their long position, takes them out of the market. You start getting red candles. And now basically the first move here is you're hunting stops, because there's a lot of people that instead of making the tough decision, they just trailed their stops, 25 or 30 pips. So if you can short this now, which is different than profit taking, and come in and start hitting the stop losses that are placed in here, then you're going to see this make a quick trip down to here, because then it's going to cascade, and that's what stop hunting is. Okay. So moving over here, well, Brooke says, hey man, we're at long-term support. Do I start buying here? Well, you could. Okay. But does that look like a good entry? Not on a 4 hour. It'd be a death trap. What else could we add to this? So this is the monthly M1, as you should know. Okay. This is the weekly S3, and weekly S3, that's weird. There's something incredibly unusual going on to be down at S3. So do you want to buy it when it's unbelievably bearish? Ooh, well, I'd caution you to that. Because remember, what I'm trying to do day in, day out is do the boring trades. Buy at this price, sell at that price, all this kind of stuff, all the predictable stuff. When you're blowing through your weekly pivots, something is very, 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 very bearish in this case. The dollar is ripper strong, and I think it has a lot to do not only with the other central banks talking down their currencies like the ECB, but also money is flowing towards that 3.0 10-year T-note, right? So do you buy something incredibly bearish? I'd be cautious. But of course you could, right? So what you'd end up doing is, let's say on this 15-minute chart, you would set it up as a double bottom, right? Let me get rid of our short trade from yesterday. Okay. Okay. You'd set it up as a double bottom. Do you think we're at a price for a double bottom or even a inverse head and shoulders, right? Would that form where we are now? And the answer is yes, it would form right here, right now. So if you happen to be a bull, you'd scalp into this reversal. And by the way, don't expect it to reverse quickly. So you're going to get a higher high, and then it's going to come all the way down and double bottom, sort of like what we've already had. So looking at this now, either on a 5-minute chart or a 1-minute chart, you take the next move up. Okay? Which means in the next 15 minutes, you'll probably be a buyer, or you watch it drop to the lower level, which just gives you permission to be cautious even further. Okay? Highlander says this pair is awfully overextended. You guys need to teach yourself that this can fall forever. Okay? It's a very big mistake, and it's cliche almost, because I've seen it forever, years and years and years and years and years and years. I see a very common problem that inexperienced traders will say things like, well, it can't fall any further, right? Maybe not those exact words, but you know what I mean? Like, I'm going to buy it because it's so oversold, I'm going to buy it. I would caution you, and in fact, I would advise you to never, ever, ever, ever think that way. In fact, I think this can fall forever. I don't care how oversold it is. The reason it's oversold is everyone is selling it, right? So you need to be very, 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 very careful. You don't want to stand in front of this freight train. It's like jumping into the tsunami. Everyone else is climbing up to the balconies, and you're jumping off the balcony. You're like, where's that dude going? I don't know. He thinks he could stop it. So just be very, very careful. These are not the right glasses. Be very, very careful. You could look for a turn to the upside here and buy it. I would do it only as a scalp. I would jam my stop quickly. But I would rather, like, I'm trying to teach you a lesson, right? So my lesson here is this can fall forever. Like at FX Street several years ago, someone said, I was asked a question, hey, can euro dollar fall to parity? Like, parity? It could fall to zero. Who cares? Right? It could. There's nothing to say it won't. If it's dropping like this, you should treat it like a tsunami and just either float with it or get out of it. Okay, you're not going to be able to fight it. You're not going to be able to turn it around. And you should be very, very cautious. Now, that being said, what if you saw something like this later in the day? Okay, I'd rather take that, because that's a sign that the tsunami is going back out to sea. Okay? So you don't have to be the first one in this. Remind yourself that to change the euro dollar from incredibly bearish to suddenly bullish, you have to overtake 40% of the entire foreign exchange market. What is that, $2.5 trillion? It's like turning an aircraft carrier, right? It's not that easy. You can't parallel park an aircraft carrier between two other aircraft carriers, right? So anyways, just be careful. Don't. Well, how about this? Let me just, one other thing on the same topic. I am trying to teach you to trade with the trend. Okay? That's what I'm trying to teach you. So if you look at this, let's say more recent trading history, and you say, well, this looks predominantly bearish, then I would prefer you be a bear. And then as a bear, I'd ask you, well, do you like selling at monthly M1? And your answer should be no. So I could say, well, then stop selling, wait for the retracement, okay? Maybe sell it up in here, okay? That takes patience, that takes discipline, but we know those are two qualities of a successful trader, okay? And then a bull, if they were to buy it, is M1 support? Yes. Do you have a reversal pattern? No. Well, when are you allowed, based on your rules of engagement, when are you allowed to even consider a bullish entry? Well, after a reversal pattern. In fact, I would like to see a double bottom followed by a higher high, followed by a higher low, followed by an entry. And that may not happen today. Great. Yeah, the trend is like your lover, right? Keep her close, treat her right. But just bear in mind, one day she's going to betray you and stab you in the back. Just, I don't know. Because eventually the trend's going to change, right? So you can fall in love, just don't marry her. All right. USD Mexican peso. We talked about this middle of, I guess maybe even Tuesday. Maybe Monday. I think it was Tuesday's webinar at Forex.Today. We talked about this is a beautiful shorting opportunity, but it's too early. Hey, Eddie, YouTube just banned your speech or your text, so let's keep it family friendly, huh? I know you're adding some salt to the analogy, but be careful, bro. Anyways, we knew on Tuesday that there was a high potential for a reversal trade to develop on this USD Mexican peso, but the trade that I typically or only make on the peso is a fundamental flow trade. Okay, and it's too early for the flow. So I said if you started trading it, you have a technical trade, which is fine, but I think you're mostly betting on the US dollar weakening. But under these circumstances of, of the 10-year T-note at 3.0, I'm like, really? Dollar weakness now? Like, I hope so, but I think we talked about it being too early based on just the flow trade, right? So anyways, it did come up, it did drop, it did go up, hit the R2. Look how beautiful that is. Weekly R2 inside the monthly profit zone. And then at that point, we talked about it, hey man, it should drop down to this neckline, to this old shoulder line. And really, if you were going to be a bear, you should rally it up and maybe we get the head and shoulders trade and then drop it back down. I'm just not concerned or convinced, let's say, that we're going to get it this week. But we have a choice, really. You have to decide when payday is. Is it Friday, which is it today, right, in which you probably were betting earlier, or is it going to be next Friday? The first of the month is Monday. Nobody gets paid on Monday, right? So maybe it does drop today. I don't know, but these are the decisions we all have to make, and you're kind of on your own. If you're gonna dump this, when is it? Beautiful setups earlier in the week. Again, monthly target, weekly target, right? Let me highlight this for the newer traders. This gray zone here is the projected top for the month of April. We knew that on April 1st. This is the predicted top for this week, and we knew that on Sunday, actually. Okay, it doesn't mean these were all beautifully tradable. They were actually not very good trades at all, but they did stop at the predicted top. Okay, so again, we knew this high April 1st, we knew that would be the projected high. Monday, we knew that was the projected high. We have all of that, so you could take it around, and then based on fundamental flow analysis, repatriation type flows, we do expect this peso to fall. Does it start today, or does it? It's supposed to happen next week, but it's not easy. You have to decide when the flow starts. It might start today, it might start Monday, it might start next Friday. So when do you get in the trade? And well, there you go. Those are the key things you need to consider when making your own decision, right? Am I doing all right today, guys? Give me a like if I'm hitting the right topics, and then we'll move over to like gold and oil and stuff. But I've been bitchy the last few days, so I apologize for that. Hopefully I'm in better mood. I took a 3-hour nap yesterday. I went to bed early last night. Yeah. So if I can get some thumbs up to let me know, that would be appreciated. And again, subscribe because you'll be alerted when I do these live events. Okay? Bitchy Wayne is the best Wayne. Yeah, well, but like honestly, when you do this every day for 15 years, you're gonna see you get me, right? Yeah, but Ron, that generally doesn't bother me. But I'm okay, I got some pretty thick skin, but I just don't know. I need some more sleep. All right, here's gold. And gold, you look at this and you're like, Wayne, your chart's a mess. Yeah, well, maybe gold's a mess. So I have to I don't want to delete this stuff because it will show you what I was thinking in the past. So going all the way back to like February, you can see I developed this as a bottom. Then it rallied up, and I have this developed as a top. And we continued trading it as a top through all of April. This is late March, all through April. We continued this top, which really, as you can see, goes all the way back here. And I have it, though, as a step up. So I'm treating this as a step up from the older bottom, which is down here. And based on this and improving macroeconomics, you can see I was planning for a breakout to the upside, and that just didn't work. Yeah, it rallied back to the top, and then made another sort of higher low, and we attacked it again and again and again, and finally it just collapsed on me. Went back to our old bottom, and is now even below that. So I think I said back in here, back when we were, when is this, a week and a half ago, I said basically I'm neutral and taking a break. And so it's fallen further. Is it trending though? I think it's waiting. It's waiting for weakness. Oh, is that right, Martin? That's funny. Martin says, Bitchy Wayne is brutally honest and clear. When you start the webinar with, I hardly had any sleep, he learns the most. Yeah, that's funny. Which seems to be often anyway, so I apologize. It's hard being a dad, a trader, a strategist, a full-time college student. I get, and a daddy and a husband. It all adds up, right? All right. So anyways, going into here, here's our oil, okay? We started as bulls in the month, on the beginning of the month. So here we are, April 1st. We're waiting for it to come down. Simple 1, 2, 3 type pattern. 1, right? 1 is the bottom, 2 is the high, 3 is the roll reversal. At the M2, we totally planned this out, like totally. We had it at like 62.25. I'm sorry, came down to $62. I'm sorry about the extra quarter, right? But look what we had planned. That we planned it in March, and here it is in April. Our plan was 62.25, and then up in here, somewhere between 69 and 70. We hit that a couple of weeks ago, and what did I say? What was the message a couple of weeks ago? Came up, slammed right into our target. We're only 2 weeks into a 4-week month, and I'm like, that's it, it's done, stop trading. Right? Which is, yeah, take a break, walk away, be done, be happy. Eternal Soul says, gold is really hard to trade in my opinion and seems really volatile, especially against the dollar. Well, yeah, Eternal Soul, you have gold, supply and demand for, let's say, physical gold, industrial gold, if you will, whatever. And then you have the dollar play. What you should do, Eternal Soul, is not tell yourself it's hard to trade and it's volatile and stuff. You should just recognize that right now it's in a range and trade it as a range, or just say, I don't want to trade it until there's a trend, and that you understand the fundamental trend behind the move. And right now, yeah, there is some central banking verbal intervention going on. And some of these central banks, like the ECB, are troughing out of one policy into another. And those are the situations where you get muddy moves, sticky moves, right? Like they break out, drop back, and break out again, and then drop back even further. And it's because, well, the market hasn't decided. So in those situations, when you recognize that, Eternal Soul, don't say it's hard to trade and it's volatile. Just look at it and say, I don't want to buy or sell gold in these market conditions. And then just leave it at that. This way you're in control. Because what you're saying to yourself, Eternal Soul, is that I can't trade this. Which means you are teaching yourself that is out of control, which isn't actually true. And then, of course, you might start telling yourself about other things too. And one day you'll stop trading Forex altogether and you'll take some options trading course, and maybe that'll work, right? So what you should say, Eternal Soul, because you're training yourself, right? So I'd rather you say, I don't want gold with these market conditions. Now, when you say that, you're teaching yourself that you're in control. Now, you're not in control of the market, but you're in control of your behavior. So you're like, I don't want to trade gold like this. I'll keep an eye on it. Maybe later. Maybe next month. I'll check it out then. I'll see if I will like it then. And it's a small thing, but it's a giant thing. So if you ever study like neuro-linguistic programming, or even motivational type stuff, all this stuff is very important to the kind of internal character that you're building for yourself, right? So I'd rather you say, I don't like gold, I pass. I pass, I'll check it out later. Okay? Yeah. So anyways, so now what, Wayne? Wayne, great, you were so awesome 2 weeks ago. Well, what about now? Well, we had talked about the potential shorting up in here and potential buying in here. But I think this is the one I was calling, picking up pennies in front of a steamroller. I mean, they're scalpable. They're short-term moves. There's not a lot of money in them. And you face volatility risk now. Volatility meaning you buy it, and for 3 hours it goes against you. You lose money. And then the next 12 hours, it goes in the direction that you traded. But instead of making money, you lost money. And you're like, what? Just because the oil market opened against you. Well, why did the oil market open against you? Well, it could be the future. I mean, these are futures, right? So somebody just might be hedging. The market just might be hedging on next week's rollover or next month's contract or whatever. So a bunch of brokers come in for some big traders on the trading floor, and they do this, la 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 la, and you lose your money. And it doesn't even have anything to do with you, right? So I caution you on such moves, but you certainly could do it. But I don't see this as a hardcore range either. So if you had to sell, this is a sell in here. This is a much better sell. And it looks like I actually showed you guys how to do it. Let me drop into a smaller time frame. And let's see if I can roll this back a bit. I actually set it up, so we must have been talking about it. I don't actually remember it. Okay. Yeah, okay, now I remember this. Yeah, so we actually set it up. I'm sure the message would have been very similar, like, I don't really like the idea of you selling this, but if you had to sell it, and unfortunately I can't squeeze this in any better. You could see, okay, what are the steps here? One, you're at resistance. In particular, weekly or monthly, I think that's a monthly target, right? So our assumption here as a scalper is that short-term oil traders are going to take profit. The second part is it's a double top, right? Oh no, it's the first move. Oh, okay. Wow, that's aggressive. All right, but I'm sure I said that then. Okay. Okay, so anyways, yes, you're at resistance. 2, you got the big drop, which is 100%. That's what this oval is telling us, was that it's greater than a 618. It's a 786 or even 100% retracement back to here. So that sets up the lower high, which then sets up the lower low type move. Okay? And you can see I even kind of guessed 2 moves here, and then that you'd have an expansion wave. Looks like we got everything except the expansion wave. But this gives us a different lesson too. On a higher time frame, like an hour, it's set up the same way. Okay? And that as a scalper in particular, guys, if you're trying to reverse a market, always remind yourself that it's going to take 2 or 3 moves, that you're not going to get a V-shaped reversal, right? Like a bearish market's not going to reverse like this. Okay? And a scalper would be the one buying here. So you can't, or you shouldn't, as a scalper, say, all right, we're at obvious support, so let's just say this is a support area. You're like, oh, we're at obvious support, it's going to reverse now and going to make a higher high, right? Wrong. What you should plan on is a slow reversal, okay? And you're going to see the double bottom at a bare minimum. So a scalper would go here, probably take some profit, have it fall down, buy it again, it's going to make a higher high, still not on the free and clear, it's just going to go to the next level of resistance, take some profit, and then expect a higher low, 1, 2, 3, and then take that and have a third trade. And on a higher time frame, it's just going to look like a down, sideways, and up. Does anyone remember the analogy I use in my book to describe how the Forex market reverses? How I discuss this? What analogy do I use so that you have a mental image of how the Forex market reverses? That's right. The Forex market reverses like an old man easing into a hot bath. By the way, there are reviews on Amazon.com that say it's the worst book ever written, not the worst Forex book, but the worst book ever written, and that it's exactly like every other book that I'm just rehashing everyone else's crap. Then I'm like, really? Does everybody write like that? I'm like, those reviews are like fake news, right? I'm like, amazing. Amazing, there's such hateful people. Because like, I don't think it's, I doubt it's anything like anyone else's book. I know because I wrote it. All right. There we go. Right? I'm sure there's lots of great books. Right? Like, I'm sure Kathy Lean, for example, has fantastic books. She's fantastic with her fundamental analysis. Fantastic. But I doubt you laughed if you read her book. I'm just saying, you probably laughed a little bit when you read my book. Right? I described when I first started trading Forex, I sucked. But I worked really, really, really hard, hours and hours and hours and hours and hours a day to improve, working on very, very specific things. And after several months of doing this, I sucked less. A year later, I sucked even less than that. I've never said in my book I was a good trader. I just slowly sucked less and less and less. Which means there's always opportunity to improve. And there's always reason to work hard and learn new things. Yeah. All right. Okay, yen pairs. I think I bought 5 yen pairs on Monday. And several of them hit their targets, several of them broke even, and anything open collapsed. So I'm just starting left and working way around. We bought it here on Monday, and by Tuesday or Wednesday, I was taken out because my target was here, the combination of the weekly target with the monthly target. So again, on the first day of the month, so if I back out all the way to the first day of the month, the trade plan was buy it down in this zone, which you can see I have it completely highlighted. Look how obvious it was. Yeah. Okay. And the target was this gray zone, as you've known from previous pairs. Okay. So then moving into this week, this Monday, right? Now we're looking at a weekly swing into a monthly swing. This is the same trade. Fractal geometry. Exactly the same setup, just on a different time frame. This one was the buy zone. The pink area is the target. Overlap that with the monthly target. I'm like, oh, I'll jam my stop right there. So by the time Wednesday's seminar came up, I'm like, oh, it's gone. 150 pips. Boom. Okay. So then we talked about, do you have the gall to reverse this? Well, that's a counter trend trade. I don't like counter trend trades, but you definitely have permission. So anyone that's taken my swing trading course knows that there's only 2 counter trend trades. That's one of them. And in that scenario, a return to the central pivot point is, let's say, I wouldn't even be so bold as to say likely, but let's say is considerable. You can consider that if it does reverse, it may reset back off the central pivot. And then I talk about, once it's there, I don't know if it falls further. I don't know if it rallies back up. There are so many different things going on in the world and over time that it would be foolish for me to try to even predict. But having it move back to that central pivot, I've seen happen a lot. Now, it's hard to think that on Tuesday, right? Right? Like Tuesday, we just made 150 pips like overnight. And you're like, yay, it's going to go up forever. But then I have to caution you, it won't go up forever. And in fact, here is a cluster of monthly and weekly pivot points. In your experience, what happens to the market when you've hit weekly and monthly resistance? What tends to happen? And hopefully over the days, the weeks, the months, the quarters, and the years that you hang with me, even decades, some of you, right? What is what is the highest probability? I think the highest probability is stop buying it. The second probability is if everyone's going to stop buying it, monthly swings and weekly swings, then some bears are going to see the vulnerability and take the shot. So will it retrace back to the central? I don't know, but it has a reasonable propensity to do that in many cases. And look how long it took. Tuesday, Wednesday, Thursday, then we got our Euro news. And even though we got that crazy Euro news, was it really that crazy? What did it do? It just went back up to the pivot and dropped. Seems pretty logical to me if you were a bear. And it did, it was hard to think it and imagine it on Tuesday, but here by the end of Thursday we're here, and then by Friday we're even lower. Okay, and I consider that is moot. Like it's sort of irrelevant. Like to me, getting back to the pivot is one thing, and then after that I don't really even know. Okay, maybe this area here, but now we're through that. So it's more like forget about it. Don't trade against it. There's not a lot of setups left. So if you were going to continue to trade it, look for retracements back to these roll reversals. Look for fib retracements. Look for 15-minute 5 EMAs. Look for hourly 5 EMAs. So like this 5 EMA here on an hour should be a 21 on a 15. Oh, there it is, right? So just sort of chip away at it, but consider them short-term moves. Consider them scalps. So yes, we've made a lower low. So you trade it this way. Let's do triangle. This low is lower than that low. Okay. So now your job is to plan. If that low is lower than that low, then our retracement should be a lower high. So let's make it back to this 21, so a 50%, and then that is supposed to make a new lower low. So 50% predicts a 1382. Oops, and I lost it when I did that. Let's redo the shape. Okay, this low, let's call it a 50% retracement. 50% predicts a 1382, and that's your next move. That's what you're planning in your mind, and you could just keep selling, selling, selling. But if you get into this area, you should probably take a walk. Or if you find yourself up here, ish dead, ish kaput, or expect a double bottom on the hourly or something, right? But you shouldn't be you should adjust your expectations accordingly. Okay? So we're not there yet. So if you're trading 15 minutes or less, 15-minute chart, 5-minute chart, all that kind of stuff, then there are a few crumbs to pick up, right? Okay, right? So you would sell in here, you put your stop up here, and I'd be cautious. Like, where are we going? Maybe 3150, right? Maybe. So you have to be comfortable scalping 50 pips or less. Thank you for that. Let's bring up tradethenews.com. I've been using tradethenews.com, I think, 12 years. Maybe longer, probably longer.
Minute to the first quarter advanced GDP data for the U.S. against the first reading on Q1 GDP for the U.S.
Thumbs up, guys.
Expected to
that means I'm
show the typical
right
seasonality for the first quarter, expecting headline quarter over quarter at 2.0%.
Appreciate the feedback.
2.9% prior.
Focused.
Personal consumption expected at 1.1% versus the 4% prior.
Child, so
GDP price index expected 2.2%, and core PCE expected 2.5% quarter over quarter. This is the advanced Q1 GDP data. The advanced Q1 GDP data in just a few seconds.
2525 OCO.
(2.3%) 2.3% for GDP, 0.3 higher than expected. Consumption at 1.1% is in line with expectation. Price index at 2.0% is 0.2 lower than expected. Core PCE at 2.5% is in line. So again, headline 0.3 higher than expected at 2.3%. Price index 0.2 lower than expected at 2.0%.
Extended slight gains here against the major pairs. Euro 120.60 being approached.
Chevron CVX, they reported revenue of $38 billion, earnings of $1.90 per share, was well ahead of the $145 on a headline basis. Saying foreign currency effects increased earnings by $129 million.
So everybody happy with the number? 2.0.
Continue to see some upward momentum on the greenback following the U.S. data. The employment cost index beat expectations along with annualized GDP. The euro falling to a fresh low, 120.71. Cable down more than 1% still. U.S. Treasury futures did drift lower, particularly at the short end of the curve. The 2-year yield is up on the day now.
This scalp is holding up. We'll see though. That's why you invent stop losses. It's not a big deal. So 2.3 annualized on advanced. The GDP price index 2.0. Slight beat on the employment cost index. Consumption as expected. Seems fairly ho-hum to me, isn't it? What do you think? Eternal Soul says, euro dollar went absolutely nowhere. Well, where would you expect it to go? We just talked about it being almost meaningless. Why would it move? Baby, every dog on the street. By the way, I'm open to questions. You guys want me to cover high yield? What's going on, Goose? Talk to me, Goose. ZAR didn't move. We were hoping for a reversal, but we talked about it being still quite dangerous. Unfortunately, South Africa still has its challenges. Come on, South Africa! Life must be tough in South Africa. I've never seen so many problems. Look, we hit our target on Euro Turkish Lira. Pays a really great yield, by the way. Yeah, what is it, Dan? 250% now? You guys want Beast? All right. So again, here's that peso trade maybe setting up. Are you ready to be swept off your feet? Chasing every breaking wind. Okay, what do you think of that? Seems pretty logical. If you go your way and I'll go mine. Are we so helpless against the tide? All right. What do you think? Good place to sell? Probably not, huh? We're not far from 150.50. I think I bought it there at some point. That must have been the beginning of the month. I remember this 150.50 for some reason. I think what it was is this move here. Very interesting. What drives the lira? Well, the thing that I set up for the macro trade for euro lira had to do with improving global macroeconomics, that all the cheap deals in Europe maybe have been done already. Everyone's bought up all the cheap deals. Remember, compared to the United States, Europe was cheap. Then the euro got strong because people were buying all the cheap deals. And market economic conditions in Europe were improving pretty well. If you're thinking a couple of months ago, right? Right? The data coming out of Europe was really good. So I thought, like, yeah, it's not an Erdogan kind of play. It was more of like, well, if Europe is doing better, if Europe is improving, if confidence is growing in the Eurozone, that risk money is going to start to be deployed, and one place European risk assets are deployed is Turkey, because of the whole EU expansion kind of idea, right? It's the close emerging market investment opportunity for Europeans. So I'm like, yeah, so that's where we'd go. And so we shorted like USD Turkish lira for about a month or something, or several weeks, and we did really, really well. And then I got out of that trade for a big profit, and then the whole thing collapsed, and just instead of falling, it went up and up and up and up and up. And things changed, and the data out of Europe is not amazing. So how about this? One of my neighbors is a senior person at Coca-Cola, was just laid off. I'm like, what? And then I hear a report the other day that PepsiCo met their sales expectations, their revenue expectations, but most of it came from potato chips and fast food, and that Pepsi is struggling on selling Coca-Cola. Pepsi-Cola. Coke is struggling to sell Coke. Pepsi's struggling to sell Pepsi. And yesterday, Ford announced they're going to stop making cars. In 2 years, which is nothing for a car company, in 2 years, 90% of the vehicles made by Ford will be trucks. And I'm like, well, what about the Ford Mustang? You're going to stop making Mustangs? Like, think of it. Americans are not going to drink Coca-Cola and drive Mustangs? Right? Like, oh my gosh. The world's changing. You know, that's the funny thing with statistics. I read somewhere that the French per capita eat 50% less baguettes than historically. And you're like, well, what does that mean? Well, it means being French has a different definition, so to speak, right? So you might say, well, couscous sales have gone up 10,000%. Right? Being French doesn't mean you're a little white man sitting and smoking your cigarettes and drinking your wine and eating baguette. It's changed. The world's changed. Americans don't buy what they're gonna. They don't drink Coke and drive Mustangs? Like, what? I'm just shocked by that. And I'm pretty sure like Disney makes more money in Asia than they do the US. Like, who's Mickey Mouse, right? Yeah, well, yeah, so I figured as much because 10% of the vehicles are going to be cars, and I'm like, that has to be the Mustang. But still, right? It's pretty shocking. But I know some of you guys are going to get mad, but the Mustang's not that great of a car. You know, when you make a car that's got like little things built into it that look like, let's say, air scoops, but they're not air scoops, they're just folds in the metal to look like air scoops. Rather, I'm like, well, if you thought they needed air scoops, why wouldn't you just put that air scoops on them? Like, why don't you just make it a sports car? It's a Ford Taurus. It's a two-door Ford Taurus. Sounds like blasphemy. Yeah. It's a Ford Fusion with a Mustang on the front. Come on. At least make a real car, right? Yeah. So anyways. Yeah, so yeah, I told you the news wasn't going to do much. So there you go. So any cheeky monkey's going to buy this? Is it at support? Yes. What does that mean? You can't sell it. And that means if you can't sell it, you could buy it. Is it going to go up? Well, I wouldn't call that the world's greatest setup, right? Is that a textbook setup for buying? I kind of feel like we're in the middle of the range, and I'm really looking forward to new weekly pivots, new monthly pivots, some new fundamental data, all that kind of stuff. Right? So this really looks to me is that you should let it rally up and then sell it later. But that could be this afternoon, that could be Monday. But isn't that sort of the higher probability of what we're doing now? Okay. And you can see I had this drawn days ago. So be careful, okay? That's all. Any other currency pairs? It's been what, an hour and 15 minutes. Could I get a couple more thumbs up, please? Please. Remember, subscribe too if you want to attend future events, because it gives you an alert if you're subscribed. Aussie, didn't we do it? I thought we did that one. We so helpless against the time. Pound Aussie, interesting. Didn't we do this one already? Well, you can see we had it set for reversal. You see we have it at resistance. I think this conversation was there are two places to sell. You sell it here or you sell it there. You can see the double top and the drop. Let me get rid of the fib. It's in the way. It's just caught up here. This is monthly resistance, right? I think I remember this one now. I believe I bought it at, that's right. I bought it here at, I can't even read that, 82.5 on Monday. And then by Tuesday, kind of like I was already out of the euro yen for 150 pips profit. My pound yen was up 125, I think. One other broke even, right? And then this one, we're in the situation where we were at this pivot, which is a key pivot, and you can see it's a clear roll reversal. Okay, that's where we were on like Tuesday, yeah, I don't think it was Wednesday. I think it was Tuesday. And we talked about it out loud. I'm like, you need to make a decision here. It's very unclear, right? But other yen pairs have already hit their target, which is their resistance. This is clearly not bullish, right? This is clearly not bullish because we've made a lower low. Other pairs were making higher highs. And we're at this pair's clear resistance. So that my euro yen was already taken out for profit. What should we do here? One was very, very bullish. One was modestly bullish. And this was only 50 pips or something, right? So the thing is, what do you do at 83,000? And I said, you need to make a decision one way or the other. You take your profit, walk away with 50 pips, which is not great, or you jam your stop and just hope that the market becomes very bullish and drags even the Aussie yen up, right? Eddie says, or sell it. Well, I don't think I was in a mindset to sell that. Because I bought it, so obviously I wasn't, right? So the real question was, take a profit and run, or jam your stop at break even and walk away and let it run. Either you run or you let the trade run. Okay? Yeah, Highlander, come on. Yeah, I'll cover it. I apologize, Highlander. I missed yesterday. I don't know. My head wasn't screwed on straight. Like I said, I ended up just taking a big nap. So I don't know. I fell apart yesterday. I apologize that. So yeah, let me cover it for you. Okay, so if you're a bull, right, our job is to identify support. Okay? So where are the levels of support you'll consider buying? Well, there's one level there, and I'd say the next level is in here. So when you get down to this price level or that price level, you move from like a 4-hour chart to maybe a 15-minute chart. Okay? And you can see this is a what we call a 1, 2, 3. Okay? 1 is the double bottom. 2 is the higher high. And then 3, what you're supposed to do is look left, drag this old resistance area across. That becomes your new support. That becomes your buy zone. You also have, if you prefer, you can use a fib. And the buy zone is anywhere between the 382 and 618 Fibonacci retracement. Does anybody know the secret word to describe this setup? So I anchored it using neuro-linguistic programming. Hammock, thank you. So it even has a secret word. It's such a common pattern. So that's how you'd put that together, Highlander. You're a bull. It's retraced back to support on a long time frame, like a 4-hour. And then you start looking for reversal patterns. This one was on a 15-minute chart, so it only took 12 hours to form. And your trading opportunities in a scenario like this, since you already know the price, so you know if it's going to reverse, you know where it's going to reverse, right? Somewhere around 82.50, okay? And you're eyeballing it, and you're eyeballing it, and you're eyeballing it, okay? And your first opportunity to trade is basically in here, okay? Trade the double bottom. The second opportunity is this one, the one I just covered, the 1, 2, 3 pattern. So you either do a double bottom trade or a 1, 2, 3 pattern trade, okay? And your assumption is it's going to happen on support at this pivot, at this midpoint psych level, and you should be long and gone. I would assume This will do something like up into here, hit that resistance. And because I see it as resistance, I know it's going to hold. If I didn't think it was going to hold, I wouldn't call it resistance. And then the next vulnerability is the next retracement. It may just drop a little bit and then rally up and break out, or it retraces all the way back down. And I don't know which one, so I think I would be best served by taking profit here. Unless I'm trading next week's pivots, in which I would want to stay in over the weekend and check it out and see how it behaves on Monday and Tuesday. But because this is such an inside week, right? We didn't make a higher high or a real lower low. So therefore, next week's pivots are really tight. And, you know, I don't know. So I'll have to decide, take my profit there, or just jam a stop and take a walk. But I think I would be inclined to take the profit. You got that, Highlander? Well, guys, 95 people still watching, 72 likes. I appreciate that. Thank you for being a client to Traders Way. If you have not signed up, please visit tradersway.com and at least open a demo account. That's okay to start there. And if you do, you can attend my daily webinars, live and free, and you can ask questions and get involved. We appreciate you. We'd like the opportunity to earn your loyalty and respect. So that's all I'm asking. Swing by tradersway.com and open a demo account. It takes you 1 minute. Yes, the swing trading group. We are going to meet at noon today to set up next week's trades and maybe even next month's trades. So we're going to look for 100 pip trades, and we're going to look for 300 pip trades. So I'll see you in the swing trading group class at noon today. Okay. So that should be good. Yeah, please. So that'll be cool, right? Well, says AH. If you're in the swing trading group, then you know. How do you join the group? fxbootcamp.com. Today is the third meeting, I think. And if you sign up, there's only so many meetings. So if you sign up today, you can join us today, and you've only missed 2 meetings. But we go to June, maybe the middle of June, and then we stop. So yeah, fxbootcamp.com. So if you, no, it's not the fun thing. That is something else. By the way, I was thinking about maybe expanding that, maybe doing a daily group work or almost every day. Yeah. So yeah, human God, no, the fun thing is different. The swing trading group and me giving you money is two different things. So anyways, cool. So yeah, so if you're on FX Bootcamp and you want the swing trading group, it says live group or swing group or trading group or something up there. But remember, you can't join unless you've completed the swing trading course. Yes. But if you haven't completed the swing trading course, then forget it. Take the course, and then you can join. I'll do another swing trading group in like September, October, November period. No, I don't record the MetaTrader stuff because it's highly personalized. We're covering people's personal trade plans, and I'm giving people feedback. Sometimes it's harsh. So no, you don't need to sit and watch someone else get reamed for their stupid trade. They're there to learn from their stupid trades. So it's pretty private stuff. Okay. Yeah, no, you can join, but realize that I want you to be a good trader already. That there's the education side is the trader psychology side, the portfolio management side, but it's not kind of learn how to be a good trader. I'm trying to teach you how to be a professional trader. So I need people that can buy at support and sell at resistance. Okay? And if you can't do that, I don't really want you to join because you're not likely to be profitable. So I'm looking for people that can produce between 1 and 5% per month. And that the relationship we have there is you put in 5,000 of your own money, and the account is then boosted up to 25,000. And then I want you to, over the course of 3 years, grow that to 200,000. But you just don't keep, you're not allowed to keep the 20 grand. But I want you to grow your account to $200,000 if possible. Because now then you have a track record of success to say, hey, you know, I worked at MetaTraders. We're a proprietary trading fund. I managed the, you know, the Aussie yen long fund. That was my responsibility over the 3 years, and I grew the account X, you know, X%, whatever 25,000 to 200,000 is over the course of 3 years, and that you had low volatility, you had low to no drawdowns, and that you can hand that to someone. So now, you know, and especially if you're going to start your own fund, now you have $180,000 in cash and a track record of success. You can go out and start your own fund. I'm also hoping to have a couple of dozen people that can trade. So maybe instead of giving you 25,000 to trade, maybe I give you, you know, 250,000 to trade. And because now I know after working with you for 3 years, you can do your job and you can do it well. And I know what to expect from you. But anyways, so that's what that is all about. That's metatraders.com. All right. So anyways, that's it. I hope to see you at our Traders Way webinars on Monday. Will I be able to see you there? Just open up a demo account, guys. In the back office, there's a link that says webinars, a button that says webinars. It'd be really cool to see you there on Monday. Shaw says, Wayne, if price blows past R3 or S3 for the next week, is it better to blah, 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 blah? Just say to yourself that's pretty rare and just be cautious. Say to yourself, I don't know what's going to happen, and trade that way. Cool. Have a wonderful weekend, everyone. Thank you for hanging with me. Thank you for the likes and the subscribes and stuff. It's important, and I appreciate that. Adios.